This is a video on Class 12 Accounts, Chapter 13 Ratio Analysis, and today we are going to study another type of profitability ratios, that is operating profit ratio. Now, operating profit ratio is a relationship between operating profit and revenue from operations, also known as net sales. Now, so the formula is net operating profit divided by revenue from operations into 100. That means this ratio is expressed as a percentage. So how to find the net operating profit? That is net profit after tax plus non-operating expenses minus non-operating income. Now what are non-operating expenses? The expenses which are related to which are not related to core activities or the main activities of the business. It can be a one-time or unusual cost which is incurred by the business. For example, if I make a loss in selling a fixed asset, suppose I deal with this stationery. So if I sell a furniture of my shop and I have certain losses in selling the furniture, so that will be my non-operating expense, because my business is not about furniture, selling of furniture or any non-current assets. So for example, here we have taken some examples of non-operating expenses like finance cost, that is interest on borrowings, and sale of non-current loss on sale of non-current assets. Similarly, when we talk about non-operating income, that means the income which is derived from activities which are not related to the core business operations. So some of the examples of non-operating income are interest and dividend received on investment, gain on sale of non-current assets. So another formula for finding out the net operating profit is gross profit minus operating expenses plus operating income minus tax. So we have already discussed about operating expenses in the last class or last part. That is, operating expenses are those expenses that business incurs through its normal business operations. This can be rent, inventory cost, insurance, marketing cost, etc. Now, what are operating income? So operating income are the amount of profit realized from a business operation after deducting the operating expenses. Such operating expenses such as wages, depreciation, and cost of goods sold. So some of the examples of operating income are cash discount received, sale of scrap, revenue from services provided, etc. Now, what is the use of this operating income? It tells the investors as what amount of revenue will eventually become profit for a company. Now, next topic is net profit ratio. So net profit ratio formula is net profit divided by revenue from operations into 100. The formula for net profit is gross profit plus other income minus indirect expenses minus tax. Or there is another formula, that is revenue from operations minus cost of revenue from operations. That means it's the gross profit. From this we'll deduct operating expenses, we will deduct non-operating expenses, and will add non-operating income minus tax. Now question number 89 from DK Goel. Calculate operating profit ratio and net operating profit ratio from the following. So in the question we have revenue from operation 8,30,000, written in words 30,000, cost of revenue from operations 5 lakh, office expenses 40,000, selling expenses 18,000, interest on debentures 12,000, loss by accident 24,000, interest received on investment 10,000. So first thing we'll find out is the net operating profit, that is equals to revenue from operation minus cost of revenue from operations, that is my gross profit, from which I'll deduct the operating expenses like office expenses and selling expenses. So from 8,30,000 we'll deduct 30,000, so we'll get the net revenue from operation. Then minus 5 lakh, that is cost of revenue from operation. minus 40,000 of office expenses and 18,000 of selling expenses, that is equal to 2,42,000. Now net revenue from operation is equals to, that is sales minus sales return. So the amount is 8 lakh. So putting it in the formula, that is operating profit ratio is equals to net operating profit divided by revenue from operations into 100. So 2,42,000 divided by 8 lakh into 100 is 30.25%. Next, net profit ratio. As we know, the formula is net profit divided by revenue from operations into 100. So let us first find out the net profit, which is equals to revenue from operation minus cost of revenue from operation minus operating expenses, that is office expenses and selling expenses, minus non-operating expenses such as interest on debenture, loss by accident, plus non-operating income, that is interest received on investment. So now writing the amount, 8,30,000 of revenue from operations minus 30,000, that is return, minus 5 lakh is cost of revenue from operation, minus 40,000 of office expenses, 18,000 of selling expenses, interest on debenture 12,000 minus loss by accident 24,000 plus 10,000 is the interest received on investment. So the total of net profit is 2,16,000. So the net profit ratio is 2,16,000 divided by 8 lakh into 100 is 27%. Next, question number 91. Calculate the GP ratio, operating profit ratio, inventory turnover ratio and working capital turnover ratio. In the question we have purchases 18,30,000, direct expenses 4,10,000, opening inventory 3,60,000, closing inventory 4,40,000, operating expenses 5% of sales, revenue from operations 30 lakh, current assets 7 lakh, current liabilities 2 lakh. So first question we have to find the GP ratio. So the formula for gross profit ratio is gross profit divided by revenue from operations into 100. So here first we'll find out the cost of revenue from operation, because we have revenue from operations over here. And if I find out the COGS, then from sales, if I deduct the cost of goods sold, I'll get the gross profit. So let us find the cost of revenue from operation, which is 3,60,000. That is my opening inventory, plus 18,30,000, that is the purchases, plus 4,10,000 direct expenses, minus closing inventory, that is 4,40,000. We have applied the formula, that is opening inventory plus direct expenses plus purchases minus closing inventory, that is equals to 21,60,000. Here the gross profit is, that is revenue from operations 30 lakh minus cost of goods sold or cost of revenue from operation 21,60,000, that is equals to 8,40,000. So the GP ratio is equals to gross profit by revenue from operation into 100, that is 8,40,000 divided by 30 lakh into 100 is equals to 28%. Next we have to find the operating ratio. So operating ratio formula is operating cost divided by revenue from operations into 100. So let us, for finding the operating cost, the formula is we need COGS plus operating expenses. So let us see what is the operating expense. So in the question it is written that the operating expenses is 5% of sales. So here we will find out 5% of sales, that is 30 lakh, that is equals to 1,50,000. So operating cost equals to COGS, that is 21,60,000 plus 1,50,000 divided by 30 lakh into 100, that is 23,10,000 divided by 30 lakh into 100 is equals to 77%. In the third part we have to find the operating profit ratio, which is equals to net operating profit divided by revenue from operations into 100. So the formula for net operating profit is from the gross profit we'll deduct the operating expenses. Since there is nothing else, non-operating expenses and non-operating income are not here, so we are not going to mention that. So we'll simply subtract operating expenses, that is 8,40,000 minus 1,50,000 is 6,90,000. So putting it in the formula, that is net operating profit is 6,90,000 divided by 30 lakh into 100 is 23%. The fourth part, that is inventory turnover ratio. So the formula for inventory turnover ratio is equals to cost of goods sold or cost of revenue from operations divided by average inventory. And the average inventory is opening stock plus closing stock divided by 2. So here we have done the working, that is average inventory equals to 3,60,000 plus 4,40,000 divided by 2, which is 4 lakh. And putting it in the formula, that is cost of goods sold is 21,60,000 divided by 4 lakh is equals to 5.4 times. The last point or the last question is, last part of this question is working capital turnover ratio. So working capital turnover ratio formula is revenue from operations divided by working capital. So the formula for working capital is current assets minus current liability, that is 7 lakh minus 2 lakh equals to rupees 5 lakh. Now putting it in the formula, revenue from operation is 30 lakh divided by working capital, that is 5 lakh is equals to 6 times. So that's all for this part. Thank you.